The markets are flashing red. The Dow just tumbled over 260 points. The S&P is in the red. And the fear index, the VIX, is spiking above 20, signaling that panic is starting to creep into the trading floor. But here is the thing. The numbers on the screen are just the symptom. They are not the cause. Welcome back to Investonomics. I am your host, and if you are watching the news right now, you are probably hearing a lot of noise about Iran, about oil prices, and about a random private credit firm freezing its accounts. But what if I told you that the real story, the one that actually matters for your portfolio, is happening in plain sight, hidden behind a wall of insider leaks and forecasts that the mainstream media is completely missing? Do not touch that remote, because by the end of this video, you are going to understand exactly what is happening to your money, and more importantly, what the billionaires know that you don't. If you want to protect your hard-earned cash, make sure you hit that like button right now and subscribe to Investonomics. We cut through the noise so you don't get cut by the market. All right, let's rewind the tape to February 19th, 2026. On the surface, the news anchors are giving you a very simple story. They are saying stocks are down because of geopolitical tension. And yes, that is partly true. The United States has amassed its largest Air Force presence in the Middle East since the Iraq invasion. The threat of a strike on Iran is real, and oil prices are surging because of it. When oil goes up, everything from gas to groceries gets more expensive, and that scares Wall Street. But here at Investonomics, we dig deeper. Because if you look closely, the geopolitical tension is just the cover story for a much more dangerous financial crime scene. The real earthquake happened in a corner of the market that most retail investors don't even know exists, the private credit space. There is a massive firm called Blue Owl Capital. These guys are not small players. They are the money behind the AI boom. They finance the data centers for Oracle, for the big tech giants. They are the backbone of the artificial intelligence infrastructure you keep hearing about. And on February 19th, Blue Owl dropped a bomb. They told their investors that they are hitting the pause button. They announced a halt to quarterly redemptions for one of their main funds. In plain English, they locked the doors and told people they cannot have their money back. Now, if you have been watching Investonomics for a while, you know that freezing redemptions is the dirtiest phrase in finance. It is the kiss of death. It is what happened in 2008 with Bear Stearns. And right now, top economists like Mohammed El-Erian from Allianz are looking at this and asking out loud, is this the canary in the coal mine? Is this our August 2007 moment? That is a terrifying comparison, because August 2007 was when the cracks started showing before the entire global financial system collapsed. The market heard that and it panicked. Blue Owl stock got hammered, dropping almost 6%. But it didn't stop there. The fear spread like a virus. Blackstone, the biggest name in private equity, fell more than 5%. Apollo Global Management down 5%. Trillions of dollars in assets under management suddenly looked shaky. Why does this matter to you? Because Blue Owl's freeze is telling us that the AI bubble everyone has been riding for the last 18 months might have just popped. These firms bet everything on AI, and now the liquidity is drying up. They can't sell their assets fast enough to give people their cash back. That is a textbook definition of a liquidity crunch. And when liquidity crunches happen in the shadows of private credit, they eventually spill over into the public stock market, which is exactly what we are seeing right now. But wait, it gets even juicier. Because while the rest of Wall Street is panicking and selling off tech stocks based on this AI SaaS-apocalypse narrative, the people on the inside are doing the exact opposite. And this is where your spider senses should start tingling. Let me give you a specific example, and this is straight from the filings that hit the SEC this week. ServiceNow, the big software giant, ticker symbol NOW, has been crushed in this sell-off. The stock is down roughly 55% from its highs. The narrative is that AI agents are going to replace software, so why would companies keep buying licenses? But look at what the CEO, Bill McDermott, just did. He didn't just hold his shares. He went into the open market and bought $3 million worth of stock with his own money. That is a massive vote of confidence. But it is not just the buying that matters. It is what he didn't do. He and his entire executive team, including the CFO, just did something incredibly rare. They terminated their automated selling plans. These are called 10b5-1 plans. Executives use them to sell shares on a schedule so they don't get accused of insider trading. Canceling them means they are voluntarily locking themselves out of selling for months. They are looking at the panic on the outside, looking at their own order books and their own cash flow, and saying, "No way, we are not selling a single share at these prices. In fact, we want more." This is the definition of an insider leak. The public sees a falling knife. The insiders see a discount. They see a company that is growing subscription revenue by 21%, with profit margins that are through the roof, and they are saying this is the time to double down. The board authorized a $5 billion buyback, and they immediately pulled the trigger on $2 billion of it. They are betting the farm that the AI panic is wrong and that they are actually the ones selling the picks and shovels to the AI gold rush. So we have two massive forces colliding. On one side, you have the macro fear. Iran, oil at 6-month highs, and a credit freeze that smells like 2007. On the other side, you have micro signals. Insiders screaming from the rooftops that their stocks are undervalued. This is the tug of war that is causing the whipsaw moves in the market right now. And let's not forget the consumer. Walmart reported earnings, and on the surface, they looked okay. But the stock dropped because their forecast for the future was weak. Walmart is the pulse of the American consumer. If they are saying the future looks tight, that means the average family is starting to feel the pinch. They are pulling back. And if the consumer stops spending, the economy stops growing. So where does that leave you? The Fed is watching all of this. Right now, the futures market is pricing at almost a 95% chance that the Fed does nothing in March. They are stuck between a rock and a hard place. If they cut rates because the market is crashing, inflation might spike again, especially with oil prices going up. If they hold steady, they might break the economy completely. Here is the takeaway from Investonomics. Do not just look at the red numbers on your phone and panic. Look at the context. The market is not one big monolith. It is a collection of stories. Right now, the market is telling you that it is terrified of private credit blowing up. It is terrified of war in the Middle East, but it is also telling you that the people running some of these companies think the fear is overdone. Your job is to figure out which story you believe. Are you betting with the panicked sellers, or are you betting with the insiders who are putting their own cash on the line? Before you make that decision, I want to hear from you in the comments. Drop the ticker of the stock you are most worried about right now. Is it a tech stock like ServiceNow? Is it a private equity name like Blackstone? Let me know below, and let's see if the hive mind here on Investonomics can figure this out together. And if you found this breakdown helpful, please share this video with a friend or family member who might be panicking right now. Send it to them. It might save them from making a costly emotional mistake. Do not forget to hit that subscribe button and turn on the notification bell so you don't miss our next update when the market opens tomorrow. We will be watching the VIX, we will be watching oil, and we will be watching those insider filings. Stay safe, stay smart, and remember, in times of panic, the greatest asset you have is information. This is Investonomics signing off.